Less than 20 days away from Inauguration Day, and this week's jobs report, it is going to matter to the markets. Hi guys and gals, my name is Blake Morrow with Forex Analytix, and you're listening to the Week Ahead video, the very first Week Ahead video of 2025. I want to welcome you all, and I'm glad you're all here. We've got so much to talk about this week. Coming into this next week, it is a jobs report week, so there's going to be a lot happening. But more importantly, it's the volatility that we've seen in the markets this week that has got everybody's attention, myself included. We had some big moves in the dollar. Are they over? Have we peaked? We're going to look into the charts and we're going to find out. We're going to talk about the markets as we go into this next week and what's going to continue to drive us to all-time highs if we're going to get there. But before I get into all that, I just wanted to say thanks for everybody being here. I'm going to go ahead and get myself out of the way. Talk a little bit about the, and for those of you that did not take advantage of the semi-annual subscription discount that we've got, it's the most and the biggest discount that we've ever brought. 40% off. Usually we do 30% off on semi-annuals, but we're giving you 40% off this year, or buy 1 month, get 1 month free. So take advantage of Forex Analytix like a lot of you did. And for those of you in the trader funding program that took advantage of the New Year offer, congratulations, welcome to the family. And I just actually got off a meeting with a brand new trader funding program trader just a few minutes ago. If you're new to the trader funding program, you can have a one-on-one time with me, and I'll talk to you the in and outs of what to expect and how to do it. So take advantage of that when you get a chance. All right. I want to talk about what's going on this next week, and you can follow along in your calendar here in the Forex Analytix dashboard if you'd like. We have a lot of different tools here, like a live squawk feed. It is Friday. The markets are still open. One of the things that we're heading into actually this week, right now, is going to be the Speaker of the House, Johnson. He's up for, speakership, I guess, to see if he's going to retain speakership. The reason why this is so important is because everybody's watching the votes to see how many times. I feel he's going to get the nod, but how many times is he going to have to go through the voting process? It's going to tell us a lot about how potentially Republicans are going to be voting in a new Trump administration. So it could affect the markets. It could have some implications at the end of the week. So it's just something to be thinking about. Speaking of next week, yes, the jobs report matters. One of the big drivers this week was the flows. We saw end of year flows, and they actually bled into what I feel they did is they bled into Thursday on the 2nd of January. And we're going to talk about what it did to the dollar and, what it did with equity markets too, as we go along. And then this next week, there's a lot of Fed speak, a lot of Fed speakers. Some of them have doubled up, but I think I counted like 11 or 12 different Fed speakers this next week. So they're, unleashed them. They're out. They're going to be talking their book. Not their book, but they're going to be talking rates and how they feel about the economy. So that's going to be all of those wild cards that happen throughout the course of the week. Let's start off by what we normally do is we talk about, the different currency pairs. And remember, we have currency pairs. We have on Forex Analytix, we have 30 different instruments. We're going to be talking about what's going on in yields, what's going on in Bitcoin, crypto, a lot of different currency pairs and what's really moving the market. Obviously talk about indices. Oh, I wanted to mention that Nick from Trading Analytix, he's going to be joining us today. He's going to be talking about NVDA, AMD, the different indices as well. So make sure you stick around for that. But we're going to start off with just the, what's happening this next week, as far as data goes. We're going to kick off on Sunday with the Caxton Services PMIs out of China. Now, one of the things that we talked about last week regarding the Aussie is we talked about us making a fresh low. Matter of fact, I'll bring it up here on our charts. We talked about the Aussie making a fresh low. That's the Kiwi. A fresh low and possibly reversing. Well, we're starting to see that reversal a little bit, but this is at 127% extension of that last move higher. You can see how we stopped pretty much on a dime at 62 cents. I think we went down all the way down to 61.79 and 61.82 was the 127% extension. We obviously talked about that. Now what's going to be really interesting about the Aussie is if we actually do make a reversal back towards 62.75. That's going to be a very, very big deal should we get there. The reason why I talk about that during the Chinese data is because one of the proxies for China, if you don't trade the renminbi or the yuan, is trading the Aussie. But take a look at what's happening in the 10-year yield in China. This is historic lows. I mean, that's the lowest we've ever been in 10-year yield in China, and that's played a big role in what's happening in the US dollar CNH. I don't know if I have that chart here. I don't, so I'll have to pull it up right here. You can see what's happening in the US dollar CNH, and we've seen this move up towards really big resistance here. This is a lot of people watching these levels, and they're going to be watching really carefully as we go into inauguration and to Trump's presidency. So anyway, we do have a lot of Chinese data coming out this week, and we're going to start off with Sunday night with some data out of China. Now, moving right along, on Monday we're going to have German preliminary CPI. So if you look at what's happening in the euro dollar, let's go over to the euro. The euro has taken an absolute bloodbath this week, and we broke lower through that critical spike low that happened, during the French, basically government failure, if you will, implosion. You can call it whatever you want. But we broke through that level, which was really key. Now, I'm going to take you back over to the charts that we use. And we also have talked about the 127% extension being reached if we broke down. Well, guess what? We actually did that. Now, I'm going to do something with you guys really quick when you're talking about the euro. And I want to lay this out for you because we have a very similar count in the dollar index. So this is wave 1. There's 3, the bigger wave, and 5. So there's an argument right now that we are creating a major low in the dollar. I was just had an interview with Jim Welsh of Macro Tides. He believes we're there. It's hard for me personally to be completely convinced of this, knowing that we have President Trump, taking office on Inauguration Day and on the 20th of January. And, he's going to enact some tariffs. So that could be very dollar positive as he comes right out from day one. So it's hard for me to say that the dollar is finished here, but technically speaking, if we get back above 103.50, that might actually signal more of an idea that the bottom is in, or the bottom in the euro is in, or the top in the dollar is in. But I wanted to point that out because on Monday, Monday we have German preliminary CPI. I don't think that's going to be the mover, but we might. But it could. On Tuesday, we have Swiss CPI coming out. And actually, there's a lot of inflation data coming out this next week. Let's go to the dollar Swiss. And the dollar Swiss, I want to show you this chart. It's actually a really interesting chart here. If you go over to the daily chart, you'll notice that we have this nice ascending channel. I'm not quite there. There we go. We have this nice ascending channel developed in the dollar Swiss. Now, is that a clear-cut invitation to just start buying Swiss francs, shorting dollar Swiss? No, but I think you need to be aware that the dollar Swiss is at some pretty key levels at this point in time, especially with Swiss CPI coming up. Now on Tuesday we have ISM services data. We just got the ISM data from the US. And by the way, I need to mention this as we talk about the dollar index. It is the jobs report, right? So not only are we going to have ISM services data where the manufacturing data employment index came in a little softer today on Friday, January 3rd, but we get the services number. People are going to be looking at the employment there. We have ADP, we have jobs data, or JOLTS data, we have weekly unemployment claims, then we have NFP. So I'm going to talk about the dollar index right now, all encompassing. But just remember, there's data all week that could really impact the dollar this week that is specific to our labor markets. But take a look at the dollar index. And this is the same wave count that we were just talking about with the euro. And we hit the 127% extension, just like the euro hit the 127% extension. The dollar did as well. Now, it's hard, like I said, it's hard to be bearish the dollar, but with all this incoming data that we're getting this next week, it could have a very big impact. Now, I don't want to be really bearish the dollar unless you break through channel support. That's pretty far away. I mean, if you think about, where we're currently at, we're currently around 109. We have to drop basically a full percent in the dollar index where we start to get into pretty dangerous levels for the dollar bulls. But the market is pretty long of dollars right now, and everybody's very bearish the euro. And the dollar's been riding and thriving on this U.S. exceptionalism story, really all for most of 2024. So watch the incoming jobs data this week. It could have a very big influence on the dollar index, and we're going to be really focused on it, especially if we and here's the weekly chart. If the dollar index starts breaking back through some of these breakout points, that's when things are going to get a little dicey. Also, I want to mention this about the dollar index. You'll notice from this high, this is a weekly chart, to the low, we hit the 618 retracement, right? High to low, 618 retracement, and rejected it. That's a big deal when you're talking about the dollar index, because that's a key golden Fibonacci level that everybody should be focused on. All right, so remember, ISM services data, JOLTS data that comes in on Tuesday. Aussie or Australia has their CPI data actually on Tuesday night or Wednesday morning. If you're in Australia, we already talked about the Aussie, and the Aussie, is once again big 120. Whoops, let's pull up the daily chart really quick. Big 127% extension that we just reached of this low to that high right there. Hit the 127% extension. So, there's a risk that the Aussie dollar could start giving us a little bit of a bounce, especially if the CPI data comes in a little hotter than expected. Wednesday, we have ADP non-farm. We have unemployment claims on Wednesday of this next week, which is usually on Thursday, but I'm not sure why it's on Wednesday of this next week. Not too sure. We also have FOMC meeting minutes. Out of Australia, Thursday morning, we're going to have CPI, and we're also going to have Chinese inflation data on Wednesday. One of the other things that's happening on Thursday morning, and I should talk about this as we go into Thursday, we have the U.S. dollar, we have Mexican inflation, lots of inflation data coming out this week. I want to show you something about the U.S. dollar Mexican peso. Well, as you can see, we're climbing in this, ascending channel, right? That's pretty obvious. But the one thing about the dollar Mexican peso, and I'm going to zoom in a little bit here. One thing about the dollar Mexican peso, it is not performing really well considering the way the dollar has been acting just in general. So what I'd be looking at with the US dollar Mexican pesos, in the event that we break back below 2050, that's going to put this channel support back in play. And that's going to be pretty important, because if you look at the election, election night, that's not election night. Election night was over here. You had the night of the election, the dollar Mexican peso just took off. We are not very far away from those levels. And I'm not saying that we're going to revisit that anytime in the near future, but I'm going to give you the buts. The thing about the dollar Mexican peso is a lot of people, myself included, expected the dollar Mexican peso to be a lot stronger going into this inauguration with Donald Trump. Mexican peso is obviously going to be a slave to tariffs, Mexican-U.S. relations and negotiations, what happens with immigration, drugs, China, and all the EV vehicles that they are bringing in through into North America through Mexico. All of those talks are going to very much influence the way the dollar Mexican peso trades over the course of the next several months. So just keep an eye on the dollar Mexican peso. Like I said, it should I would have thought the dollar Mexican peso would have been at 21, maybe 22, much higher than it is right now. Not saying it won't get there, but the way it's acting is not fantastic. All right, so one of the other things that's happening on Thursday night is we're going to have Mexico, or not, I just said Mexico. We're going to have Norway's inflation data as well. Let me get my mug off here, and let's put on the US dollar Norwegian krona. Now, the US dollar Norwegian krona has made a massive breakout to the upside. And let me find it. There it is. It has made a massive breakout to the upside. But I'm going to give you the buts here. You would have thought, and this is a daily chart, that the dollar Norwegian krona would have really built on these gains. Now, I'm not sure that it's ready to come down yet. Obviously, we're going to have to see, dollar weakness kind of broad-based before that happens. But we do have Norwegian inflation coming in on it's actually Friday morning ahead of the jobs report. And that's something that we should be paying attention to, because if the dollar should start to show some weakness broad-based and Norway's inflation comes in a little hot, we could drop back below this big breakout point, which comes in around 11.25, 11.26. That's going to be a pretty key level. And, those are levels that we've been looking at in Forex Analytix. And for those of you that are unaware of what this is what we call the bias chart. We have shows that are exclusive to Forex Analytix subscribers called the Morning Edge and the Daily Roundup. On the Morning Edge, every single day, myself and Steve Valgaris, we meet with all of our traders in the Forex Analytix community. So for those of you that are subscribers, we go through all these individual, not just individual currencies, but we talk about gold, crude, Bitcoin, S&P. We talk about VIX, some of the cross rates, and we talk about what are the key important levels and what the overall trend bias is. And so if you don't have this information every day, make sure you jump in the Forex Analytix community so you can have these conversations and get all the analysis of all these different instruments with us as we go through it. All right. And really just to wrap up our week, I think I did mention that we do have, we have FOMC meeting minutes on Wednesday, but come Friday, we have the U.S. jobs report, but also we have the Canadian jobs report. So if you look at the loonie has broken out pretty aggressively, and we're trading at the very top end of our range right now. You can see it right through here. All right, and as a result, the dollar Canadian could break out to the upside, especially following a weaker Canadian jobs report. Now, this is the time in the video I'm going to bring in Nick from Trading Analytix, and he's going to be talking about NVDA, the indices, AMD, and other things. So, Nick, it's all you.
Hello everybody, this is Nick Groves of Trading Analytix. Blake, thanks so much for passing it over to me, and I'm just going to go ahead and cover a little bit on equities. So as you can see here, I have the S&P futures up. We have broken down from this formation that's held us since August, and what's concerning is that we broke down, we came back up. I know it didn't touch the trend line perfectly like so, but a little bit of a back test of that zone, right? And we rejected. So slightly concerning. As you can see, we're holding the 618, but if you pull this back a little bit, it looks as if we just tagged a 38.2, which, as most of you know, the 38.2 is a continuation fib. I will say though, when taking a look at the S&P spot, it seems like it's been in a bit of a head and shoulders pattern. I originally had this neckline drawn out like such, so it looked like we broke down and bounced back above. But I'm not going to rule this out yet. We can go ahead and move this neckline down a little bit. And let's say in the event that we do break down from 58.35, which is very key support, this head and shoulders pattern would play out closer to 56.12 or so. So that would kind of be my target. It's also a previous high back in July. You can see it was a traded zone in August. So if we start to see some weakness, that's what I'd be looking for. But what I'm also noticing is the NASDAQ is putting in a false breakdown. And I'd like to bring up a stat that I saw earlier this week. When the S&P 500 falls at least 3 consecutive days into the year end, you can see the 1-week returns, 2-week returns, they're all showing a positive 100% win rate, which is not common, but also this type of setup is not common. You can see it's only happened, 5 other times in history. So will it ring true? I'm not sure, but I think I'm going to try to take advantage of it, right? So the NASDAQ right now, it's sitting pretty much at resistance. I think if we can clear above 21,507 or so, that we should see some continuation in the NASDAQ. And the S&P as well, one thing I'm looking at was this little trend line that we just broke this morning. And I did take a little bit of a stab long. I'm going to try to play into that stat and see if we can hold this zone. At a minimum, there's a chance that we just end up getting a little bit, range bound, if you will. So just keep your eyes on those setups. But let's go ahead and talk about big tech. So Facebook, I do find interesting right now. It looks, sorry about that. It looks close to breaking out above 608. I think if we can clear above there, that Facebook might be back on bull. It pulled back perfectly to this 38.2. It's also trendline support. So I do think that this zone here that we had keyed up for you guys might have been a pretty good zone, and we'll see how things play out. But we need to talk about NVIDIA. NVIDIA, we had it for a while in this head and shoulders pattern, right? And I said, we had the breakdown. I mentioned to you guys, I think this is a trap, and I do believe now that it is. So I'm going to go and delete that head and shoulders pattern. We tagged trendline supports, also near this 50% retracement at 126. I felt as if we got above 140, that I think NVIDIA's probably got a decent chance of moving on higher. And when you look at things like the SMH, the semiconductor index, you can see it's really close to resistance, right? And we've held this trend line really for a while. This trend line dates back to October of 2023. You can see how many touches we've had on it. It's a significant trend line, and this thing has just been coiling, and I think it's close to, probably breaking out higher. In the event it takes out 252, it might make you think, okay, well, where else can I get into the semis? Take a look at AMD. AMD has been underperforming recently, and it's now sitting in this triangle formation up against resistance, right? Right here at 124 or so. I think if it breaks 125, you see SMH break that 252 level, I think it was, and NVIDIA's pushing higher. This AMD trade could end up being a pretty good setup. But if you're looking for more analysis, please follow us on Trading Analytics. I'm going to go ahead and pass on back to Blake. Hope you all have a great weekend, and I'm looking forward to 2025. I'll see you all soon. Thanks so much. Cheers.
All right, thanks, Nick, and really appreciate the update. Now we're going to go through some other markets as we normally do here on the week ahead video. But before I do that, I just want to mention, if you're trying to take advantage of the volatility, make sure you check out the Trader Funding Program. This is a great way for you as a trader to be able to access larger amounts of capital, whether it's a $25,000 account or all the way up to $1 million account. You can do that through the Trader Funding Program. Remember, when you're new to the Trader Funding Program, you actually get into the Forex Analytix community for a period of time based on which Trader Funding Program account size you take advantage of. So make sure you do that, and when you do that, you'll have a one-on-one consultation with me. I spend 45 minutes with you talking about how I navigate through the markets, giving you some suggestions on how I've passed assessments in the past and how I've prop traded in the past. And hopefully I'll give you some good ideas on how to pass an assessment and access larger amounts of capital. So anyway, check out the Trader Funding Program when you get a chance. All right. And also you can be in the community like this. This is our trading analytic or a Forex Analytics community. You can see we talk about different charts. We have different traders in here discussing different levels they're looking at, different patterns. This is where you're involved talking to other people. Here's Nick, for example, talking about how he's getting long the S&P earlier today as it was breaking out. And by the way, it continued to break out higher on Friday. And we talk about these types of things in the community. So make sure you're involved in Forex Analytics or the Trader Funding Program, however you want to go about doing it. Okay, so I want to talk about a few other markets. I do want to talk about gold. one of the things about gold, and let me get myself off of here. One of the things about gold is in an ascending channel, and you're going to see it right here. We've talked a lot about it, and I don't think we need to really change any of this. We might just redraw our trend lines just a bit because I think we could be a little bit more specific to this channel. But what I think is happening here in gold is we might be forming what we call a triangle formation. Let me go ahead and move this down. That would be like that. We might be forming a triangle formation. So, while we're above, this would be symmetrical, right? So while we're above this trend line, the market remains bullish while we're above that trend line. So we break above that resistance, it's bullish. We break below this support, it's bearish. I mean, that's pretty simple as far as gold goes. I want to talk a little bit about the S&P. I know Nick talked about the S&P, but there's something specific I want to make sure I mention to you, okay? The S&P is making higher lows. You'll notice that. We have literally just about 2 weeks away from inauguration. There is a lot of positivity regarding President Trump, his administration, what they're going to do, and that in itself, that type of positivity about second term of President Trump could take us back towards these highs. We did come out of a wedge. I don't want to discount that. We've talked a lot about that over the last couple of weeks, but we also held a 618 retracement. So we held a key Fibonacci level, which means that resistance as we approach the 66,000 level, about 6050, is going to be pretty critical. And can we hit new all-time highs? It is entirely possible because you have jobs report coming, you have we have CPI that's going to be upcoming. We have a lot of things that could actually move us to new highs ahead of the inauguration. So I just want you to just be and have awareness of how critical this level of support around the 5820 level is. It's just huge level of support moving forward. Okay, continuing on. We talked about the S&P. We talked about gold. I do want to talk a little bit about what's happening in the bond market, wherever my 10-year yields are. So yields have been very, very strong, but we talked about this actually last week, on the week ahead video, even though it was brief. We're still at the underside of this broken trend line. And so what you got to be watching with the 10-year yield is if we actually start breaking down. So if we start breaking through this support, you can see I have an alarm set for it. If we start breaking through this support right through here, that would mean that yields are heading down. And if yields are heading down, that probably means that the dollar's in breakdown territory or is starting to break down as well. So watch yields. It's going to be hard for the dollar to continue to rally if yields have reversed. So that's something that obviously we need to be paying attention to. And last thing I wanted to mention before we get into the trade setups of this next week is I do want to talk about Bitcoin. We talked about Bitcoin and how important the pivots were off of the 95,000 level and 90,000 level, and it continues to hold up very well. As we approach 100,000, I would assume that offers some resistance. But remember, we do have a very crypto-friendly administration coming in. And if you just take a look at other cryptocurrencies, whether you're talking about Solana or Cardano or XRP, whatever, Dogecoin, look for crying out loud. You can look at a lot of different cryptos and realize that the crypto market is still very well bid. Should Bitcoin break back below 90,000, I think that would be probably a near-term bearish event. I was just meeting with Jim Welsh of Macrotides. He is looking at this as more of a head and shoulder pattern. And I think it's a setup. I don't disagree. It could be a potential head and shoulder pattern if we can hold, below 100,000. But that's just a setup. It's not, I think support is support, and support is key, and it is right around 90,000. All right. So with that being said, this is the time that I like to talk about and review last week's setups. Now, since we've been on holiday for the last 2 weeks, I haven't given you any setups for the last couple of weeks. So we're just going to kick this off with the top 3 setups, trade setups of this week, and I am going to give you a bonus setup as well. How about them apples? All right, so let's get to it. First setup, and let me get myself off of here. First setup that we're going to talk about is we're going to talk about buying the euro dollar at one of 2 levels. So the euro dollar, as you can see, is at the 127% extension. It's still trading below resistance, and if it trades back above 103.50, I'm looking to get long, maybe back up to 104, 105, something like that. But the flip side is, let me show you something. If you look at this entire move in the euro from this low right here to this high right there, the 618 retracement comes in at 102 basically. So if we get a dip to 102 or we get a break back above this resistance, I would probably argue that the dollar top is in, and I'm looking to trade counter trend. So that's trade setup number 1. Trade setup number 2 is the Aussie dollar. Now, we talked about the Aussie this last week, about it turning around the 127% extension. It's done so. So now, if the Aussie dollar breaks back above 102.80, that would be a bullish event in the Aussie. So 102.75, 102.80, a break back above that, I'm looking to go on the long side. Trade setup number 3. Number 3 is going to be looking to buy the crude oil market on any dip to $73. Now, there's already, for those of you that are not aware, in Forex Analytix, there's a pattern in play from yesterday. Okay, in Forex Analytix, it was put on by me. That's because we finally broke out of this range. Now, a simple range extension is going to take us higher than what I think we could go, but this range extension should get us to at least the 200 DMA, obviously. So what I'm going to be looking to do is I'm going to be looking to buy dips towards 73 to have a move to eventually the 200 DMA or higher. All right. Now I have no position in this, but this is going to be trade setup number 4, but this is something I've got my eyes on, and this is a bonus. I'm actually looking to sell Apple. Yep, I said it. I'm looking to sell Apple. I don't think they're a company that's very innovative anymore. I think it's more of like an electric company, and it also had a what we call throw over in channel resistance. Okay, so what I'm looking for is I'm looking for the stock market to hit a new high potentially, and it's going to drag Apple back up towards 250. And if it gets towards 250, I'm looking for a short in Apple. And that's what I'm keeping my eye on going into next week, because I think that, stocks continue to rally into inauguration day, and it could drag Apple higher, even though Apple's just not acting well up here. There's a lot of reasons why it isn't. Anyway, if you like this video and you thought it was very beneficial for you, then do all the good things and all the free things. Give it a thumbs up, subscribe to the channel. Also, I have to mention this to you. Next year, or this year now, we have so many great things coming out for this next year. We're adding new team members to Forex Analytix and our team. We're going to be doing a lot of development work on what you're seeing here on Forex Analytix for the dashboard and everything else. So if you want to be up to date on everything that we're doing, just subscribe to this newsletter. It's free to do so. Put in your name, put in your email, and hit subscribe. Okay. Jump down there in the comments if you have any questions or comments whatsoever. If there's something that I may have missed, please do that, and give me a thumbs up, and give the team a thumbs up if you think this video is going to be beneficial. And, get down there and thank Nick for jumping in here this week and wishing you all a great 2025. I'm so glad that you're here, because 2025 is going to be a blockbuster year in trade, and I'm glad to be doing it with you and on these week ahead videos. So, and make sure you log in and listen to our daily shows that are free. both the F.A.C.E show and the Flow show. Anyway, my name is Blake Morrow. You're listening to the Week Ahead video, and I want to thank you for spending your most valuable asset, which is your time, with me this weekend. Have a great trading week. I'll see you guys on the Monday. Oh, actually, I won't see you on Monday. But I will be seeing you next week on the F.A.C.E show. So I'll see you guys there. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.